Veterans, you have been lied to. From hidden fees to eligibility or what you can or can't do, this may be holding you back from an amazing investment of leveraging that VA loan to own your own property out here in Hawaii. So if you want to get all the details and get the facts straight, we're going to cover 7 VA myths debunked. Stick around to get all the details. See you on the other side. All right, guys, like I mentioned in this video, we're going to cover 7 VA loan myths and we're going to debunk them because I've heard from too many clients or just out in the wild, a lot of information that is completely incorrect. So we're going to cover all of that, make sure that you have the correct information and the facts. But before we jump into that, if this is your first time here, let me quickly introduce myself. My name is Patrick Longley. I'm a licensed real estate agent out here in Hawaii and have been helping military service members like yourselves for the last 10 years with their real estate needs. So with that being said, if you want to connect or just need some boots on the ground, want to get some questions answered, feel free to reach out to me. I got my contact information right here, or you can directly DM me on any of my social media platforms. With that being said, let's get into the 7 VA loan myths debunked. Number 1, zero down means no money out of pocket. That is completely incorrect. Now, there are ways that we can put together a deal where no money comes out of your pocket, but generally speaking, when you're using your VA loan, zero down means zero down payment, where a normal civilian using a conventional loan generally has to put 3.5%, 5%, or even 10% down when buying a property. So if they're buying $1 million property, if they have to put 10% down, they have to put $100,000 down payment. Now with the VA loan, similar scenario, you would have to put zero down. So zero down payment compared to 100,000. But there still are some other fees that we need to discuss. The first one is closing costs. So closing costs are generally going to be about 1.5% of the purchase price. So if you're buying a $1 million home, closing costs is going to be probably around $15,000 or $500,000. You're looking at about $7,500 that would have to come out of pocket for closing costs. Now, there is some ways that we can sometimes, especially in this market, get credit from the seller to help pay all or some of those closing costs. So that is one thing that I have been able to help my buyers with, leveraging the current market they're in and getting credit from the seller to cover some or all of those costs. But you want to make sure you have the facts straight that closing costs is something you need to factor in. The second thing you need to factor in is the funding fee, the VA loan funding fee. Now, this can be anywhere between 0.5 and 3.3% now in 2025, depending on whether you're a disabled vet, whether it's your first time purchasing a home with a VA loan, or if this isn't your first time. There's going to be a different funding fee. Now, that funding fee can be paid out of pocket, or what a lot of my veterans do is they will actually roll it into the loan. So if you have a $1 million loan and you have a 3% funding fee, you can actually take that 3% and put it into the loan and extrapolate it over 30 years. So you're not making a full-time payment right then and there. Now, that is something that you cannot do with closing costs, but there are different creative strategies on, once again, using seller's credit to pay for that. Myth number 2, you can only use your VA loan once and buy one property. That is completely incorrect. There is a lot of scenarios where you can actually buy multiple properties with your VA loan, but it really comes down to this magical word called entitlement. So when you are going to go purchase a property, you have either full entitlement because you don't have any VA loans pending out there, or you haven't used your VA loan, which means that depending on how much you qualify for, you can still buy a property with zero down, or you have partial entitlement, which basically means that you can buy a property zero down, but only up to a certain amount because you already have a property with the VA loan. But that right there shows that you can purchase multiple properties and own multiple properties with multiple VA loans. It just comes down to entitlement. So if you want to know what your entitlement is, the best thing to do is reach out to your realtor or your lender and say, hey, can you pull my COE, certificate of eligibility, figure out if you do have any entitlement left, how much you have left, and how much that would allow you to purchase when it comes to a second or third property. Now, there's a bunch of other different ways that you can free up your entitlement. We won't go into that right now. I've got a video right here that goes over a couple different strategies, so feel free to check that out if you're in that scenario where you already own property with the VA loan and you want to buy another one but don't want to sell that one. Myth number 3, there is a limit on how much you can actually buy with the VA loan. Now, in 2023, 2022, yes, there was a loan limit on how much you could actually buy with that VA loan. Think back in the day out here in Hawaii, and it's different for every single area, it was somewhere about $787,000. Anything above that, you were gonna have to cover the difference, or at least 25% of the difference. But since new political parties have come into place, they actually removed that stipulation so you can qualify with 0 down payment with that VA loan. Now, mind you have those other fees, closing costs and funding fee, but 0 down payment to whatever amount that you qualify for. So if you qualify for $2 million, you could buy a $2 million home with a 0 down payment, opposed to putting 10% down, 200 grand, or 5% down, 100 grand. You could possibly buy a $2 million property with your VA loan with 0 down, because there is no loan limit at this current moment. It's just based on your income, your debt to income ratio, your credit score, and how much at the end of the day you actually qualify for. Myth number 4, all VA lenders are exactly the same. This couldn't be further from the truth. Each lender, you need to realize, has different packages. Yes, they're selling you a VA loan, but they're gonna have different cash to close. They're gonna have different interest rates. They're gonna have different things that are gonna affect you financially on what you're gonna be paying every single month. So I always suggest to my clients that it's important that you shop. It's important that you shop around with your different VA lenders. You basically have 3 different options. You have the big banks, the Bank of Hawaii's, the Wells Fargo's, which I would stick away from those. That's for a different video. You've got lenders who work for a lending company, and you have brokers who actually do the shopping for you on the wholesale market. So generally what you're gonna wanna do is you're gonna wanna reach out to at least 2 or 3 lenders and ask them, hey, if I was to get a VA loan today and I was to not buy any points, what would my interest rate and cash to close be for, let's say, a $500,000 condo? You ask them all that same question on the same day, because rates can change once or twice a day. And then you'll have an apples to apples comparison. And you really want to focus not just on the interest rate, but also on the cash to close, because sometimes they can mess with interest rate, lower it, but have higher cash to close, or vice versa. So it's important that you do that you shop around accordingly. Again, if you need some lenders, I've got plenty for you, but that's something that you definitely want to keep in mind, that not all VA lenders are born equal. Myth number 5, short sales and foreclosures do not work with VA loans. This is, once again, super incorrect. I've done a handful of transactions with short sales and foreclosures and used the VA loan. Now, there are some risks with that. Now, if you're buying a short sale or, let's say, a foreclosure or bank-owned property, you're generally buying it from the bank, and they don't have any disclosures, any information about the property for you. So you really have to do your due diligence. So it's really important you have an agent who can coach you through that. But other than that, you can use the VA loan generally to buy short sales and or foreclosures. So that is completely incorrect. Myth number 6, VA appraisers and inspectors are very picky. Now, out here in Hawaii, I don't know how it is on the mainland. I've heard different stories, but out here in Hawaii, VA appraisers / inspectors, they're one and the same, are not super picky. They basically go in there, they take some photos, they're there for maybe 10 minutes, and all they're really checking for is 3 things: structural, sound, and safe. Now, when it comes to the VA appraisers out here in Hawaii, I find that they're a little bit less strict as they can be on the mainland. On the mainland, you may have paint that's chipping on the exterior just a little bit, and they'll say, hey, you got to repaint that. And the VA buyer is not allowed to do that. The seller has to do it. So it can be a little different on the mainland, but out here in Hawaii, because I think there's so many purchases happening with the VA loan, and because of the elements that take a toll on these houses, they're not super strict on those types of things. They really just want to make sure that this is a home that somebody can move into and live in. They want to make sure that it follows the 3 S's, it's structural, it's sound, and it's safe. So they just want to make sure that there's no wires hanging out. They want to make sure that there's actually floors down. It's not just rough wood on the ground. They want to make sure that the house is not falling over. So it's just something to keep in mind, that the mainland compared to Hawaii when it comes to VA appraisers is pretty relaxed. So that myth is definitely debunked. Myth number 7, VA loans take a long time. Now, if you're talking about a VA assumable, which I've made plenty of videos, check those out. Yes, those can take, anywhere from 3 to 6 months, sometimes even longer. But a normal VA loan is generally going to take anywhere between 30 and 45 days, which is the exact amount of time that it takes for any other type of loan, FHA, conventional, portfolio loan. It's all going to be 30 to 45 days. So that is completely incorrect. And especially out here in Hawaii, VA loans are very prominent, so nobody really looks at you different whether you have a conventional loan or a VA loan. Okay guys, well that pretty much are the 7 myths debunked when it comes to VA loans. If you guys got any value out of this, if you guys could do me a huge favor, smash that like button, as well as click the subscribe and notification bell. And if you have any questions about the VA loan or purchasing any property out here in Hawaii, I would love to connect with you. So please do not hesitate to reach out to me. I got my contact information right here, or you can directly DM me on any of my social media platforms. With that being said, I'm Patrick with PatrickLonelyRealty.com, powered by eXp Realty. Hope you have a beautiful day, and I'll talk to you soon. Aloha.